Bitcoin has been the best performing asset class in 8 out of the last 11 years. And if this doesn't convince you to add Bitcoin to your portfolio, then maybe you shouldn't be managing money. At least not for other people. Every single country is borrowing more than it makes. 100% debt to GDP. That is the borrowing over the productivity of the country. So $100 trillion of debt has been accumulated, 40% increase since just 2019. And this right here is why we need Bitcoin. There is no other escape.
Bitcoin is the one true solution to the current global economic crisis. This was James Lavish's urgent message to everyone at Bitcoin Atlantis 2024. His message is a call to realize how owning Bitcoin can dramatically change the lives of everyone in the whole world. Every single country is borrowing more than it makes. This alarming trend has resulted in a staggering over 100% debt to GDP ratio across many nations. His analysis leaves no room for doubt. The world urgently needs Bitcoin. Make sure to stick around to the end of the video as James Lavish discusses the impact of the Bitcoin ETFs on Bitcoin, bringing everyone closer and closer to financial freedom. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's James Lavish with his impactful message as to why Bitcoin is the only answer to all of our problems.
Now we have a choice. We can opt out of this madness. Here's what the global currencies have done against the US dollar. You can't read this, I'll read some of them for you. The Venezuelan bolivar is down 99.9%. The Syrian pound down 99.1%. The Argentinian peso down 98.3%. This is against the dollar. You saw how bad the dollar was, right? But look at Bitcoin in the corner. It's up 21,000%. And this is before this week. And now, this is what you wanted me to talk about, right? The institution. We thought we were going to talk about institutional investing, not debt. Well, it matters because now the institutions, they cannot ignore it anymore. They were ignoring it for a long time. Why? Because it's difficult for institutions to own Bitcoin. You have to go through all of these layers. So for the first time in history, you all have been able to front run the institutions. This is our time. So we've been buying Bitcoin for years, and they're just now getting in. The ETFs have changed the world for Bitcoin. And I want to make this clear. Bitcoin doesn't need the institutions to survive, right? But it's going to be a lot of money that comes into this space really quickly. And you guys have been able to get there first. And the second thing is this FASB ruling, and this is complicated. I'm not going to get into this here. Michael Saylor, he's done an incredible job explaining this, and this is one of the things that has been a pain point for the companies who own Bitcoin, especially for Michael. But essentially, the old ruling made companies treat Bitcoin as an impaired asset. If it went down, it hurt your balance sheet. It was very painful, but this has changed. So now companies can own Bitcoin, right? MicroStrategy at the end of January held 190,000 Bitcoin. I know he's bought a few more this last few weeks, but his purchase price was $5.9 billion. That Bitcoin today is worth over $11 billion. Well done, Michael. Wow. Apple has $60 billion on their balance sheet. That's in cash. They're sitting on that melting ice cube. I know they think they're smart. They're very smart because they've bought T-bills. They own T-bills, and they're getting 5% on those T-bills. This is great. I'm making so much money. No, you're not. You're not. Your purchasing power is falling. Microsoft has $111 billion on their balance sheet. Can you imagine when these companies come into Bitcoin? And now they can. There's no excuse anymore. Remember, we're really early in the Bitcoin adoption cycle. There's just under $1 quadrillion of investable assets in the world. Residential real estate, we all know, has been ridiculous. It's now $500 trillion. Commercial real estate, it says it's 115. I'm thinking it's closer to 5, but not really. But Bitcoin is currently 0.1% of the global investable assets. So here's the thing, though. We talked about the bonds. We talked about how investors, institutional investors own bonds. That's 60-40 portfolio, right? Well, now they don't have a choice but to start paying attention to Bitcoin. I mean, here's the U.S. Treasury rate. This is the global reserve asset. This is what happened to the global reserve asset in the last couple of years, and this is why Silicon Valley Bank, you guys have heard of that one out in the United States, it failed this last year. This is why it failed, right here. As interest rates go up and you hold this on your balance sheet, this is what happens to your holdings. We had the worst drawdown in the history of the U.S. bond market. And so this caused that bank to crash. It caused the Treasury and the Fed to scramble and make this fancy program for these banks to borrow without having to be impaired on their assets. But who wants to own this, the 60-40 portfolio, when you could have owned this instead? This is Bitcoin against long-term treasuries. So instead of this, you would have had this. Not this, this. So here's Bitcoin versus gold. I like gold. It's not a bad thing. It's been a tremendous store of value for thousands of years. There's nothing wrong with it. It's just Bitcoin's better. This is what Bitcoin has done against gold. But surely, Bitcoin couldn't have beat the S&P, right? I mean, that thing has been on a tear. The U.S. markets are at all-time highs. Wrong. Here's Bitcoin versus the S&P 500. But in the S&P 500, that's really driven by the Magnificent Seven. There's a few stocks there that have been driving it higher, right? So it surely hasn't beaten that. Yes, it has. If you own Bitcoin for the last 9 years, you would have 3x'd what you would have had in the Magnificent Seven. So a lot of people say, well, the problem is there's so much volatility. I mean, look, Bitcoin went up, it went down, it went up, it went down, and Right, Bitcoin's volatile, I hear you. But volatility in a rising asset is good. It's hard to wrap your mind around that, but as an investor, I can tell you it's good. Here's Bitcoin, and here's a portfolio, for the last 12 years. The blue line down at the bottom, that's a portfolio with no Bitcoin. The line right above it, the gray one, is with 1% Bitcoin. The line above it is with 2%, and that third line up at the top, the green one, is with 3%. You could have doubled your returns in the last 12 years if you owned just 3% of Bitcoin instead of 60-40 portfolio. Again, on the volatility. So if you look at those returns the last 12 years, the maximum drawdown, meaning the most you lost at any point in those 12 years, was 21% with the 3% Bitcoin and 20% without. Whereas your returns were 13% with Bitcoin versus 9% without. So now we have the ETFs. Institutions know all this, and they're coming. It's been slow. Everybody thought that, me included, I was actually optimistic about the ETFs and the institutions being ready for it, but they weren't. So what we had is we have this super highway that's been built, the ETFs. It makes it super easy for the institutions to buy. It's just like buying a regular stock now. They could buy it with their same broker on the same exchanges that are overseen by the SEC. They can settle it with the same prime broker and custody there. It's super easy. It's just like buying a stock. So they can do that. Now they know this. And so we've seen over $6 billion of inflows since the inception of the ETFs. And the assets now are $40 billion. Okay, so this is just the start. This is 3 days ago. So 2 days ago. So add another $500 million to this, and you see it's just surged. Why is this happening? Because brokers, investment managers they have their compliance in place. They're starting to talk to their investors. Now remember, I am I am absolute proponent of owning your own Bitcoin, keeping your own keys if you can do that. But some of the investment products in the United States, at least, they don't allow for you to do that, especially retirement accounts. But you can own Bitcoin in your retirement account now. Just buy the ETF. It's super simple.
So there's James Lavish's powerful message to the world. As global debt levels escalate and economic uncertainty looms large, Bitcoin offers stability and resilience in the ever-changing financial world. And with the arrival of Bitcoin ETFs, investors can now easily access across this groundbreaking asset class, opening up new opportunities for everybody, everywhere. With all of that said, James Lavish leaves us with an important message. Choosing to invest in Bitcoin isn't just a smart move, it's a bold step towards saving the future of finance. Before you leave, don't forget to subscribe to my daily 5-minute crypto newsletter. It's packed with expert predictions, on-chain data analysis, and the latest breaking news in the crypto sphere, all delivered straight to your inbox completely free of charge. The link is the first one in the description. Anyway guys, hope you all enjoyed today's video, and as always, all the best.